Hi, good morning, everybody, and thank you very much for joining us today at the Report on Business Economic Outlook event. I'd like to be able to welcome you, as well as those that are joining us virtually from across the country. My name is Andrew Saunders. I'm the President and CEO of the Globe and Mail. Before we begin today, I'd like to be able to recognize, though, that the Globe is situated on the traditional territories of the Mississauga of Credit, the Nishnawbe, the Chippewa, the Haudenosaunee, and the Wendat peoples. We are certainly grateful for the opportunity to live, work, and gather on this land. As Canadian companies continue to really navigate through, I think, today's kind of complex business climate, I think this morning, the focus of this morning really is to focus on 2025 and what should we expect moving forward. As we all know, I think there are very many more factors, I think, coming to play these days, especially with the recent outcome of the U.S. presidential election. And I'm sure that many of you are already kind of preoccupied, I think, with the potential new tariffs. Interesting news of yesterday, and the protectionism measures that will be applied from the new administration. And that's against, I think, a pretty much of a backdrop of a Canadian landscape that is still quite challenging in itself. We're dealing with a housing crisis, changes in immigration policy, the urgency of climate change, the adoption of artificial intelligence that we're all effectively dealing with, and obviously lending itself to a challenging environment. But when you have a challenging environment, there are clearly opportunities at bay. So a little later this morning, you'll be hearing from a number of key business leaders. They'll be covering off a variety of sectors, including housing, technology, and agriculture, which will be focusing on how they position themselves to take advantage of the opportunities at large, as well as navigating risk. For some additional coverage, further of coverage around the economy, we can turn to the recent December issue of Report on Business magazine, where there'll be a focus of an economic outlook of 2025 as well as we'll be profiling the CEO of the Year, annual feature that we typically put together. So on behalf of the Globe, I just want to be able to thank the Desjardins for the ongoing partnership that we have with them and the support of today's event. And I'm delighted to have their Vice President, Chief Economist, and strategist here today to be able to provide a point of view or perspective of what he or they think of what to expect going into 2025. So please welcome up on stage, Jeremy Jean. Thank you very much.
All right. Good 25% morning, everyone. I don't know what we're going to talk about this morning. Anybody got ideas? Yes, well, we're going to actually dive right into it with respect to what the way we think about the Trump administration, what Trump has proposed. I think it's important not just to think about what he's proposed, but actually a number of considerations. What is he actually likely to follow through on? First of all, because we know in the first mandate there are items that he proposed that he did not or couldn't follow through on. So that's the first thing. The second thing is the feasibility of implementation of some of his proposals. Thirdly, the timeline of execution. And I'm going to show you some of the assumptions that we've been making so far that are getting challenged, of course, when it comes to the timeline. But this is an important aspect as well. And then the fourth factor is going to be the sustainability of some of his policies, because when it comes to some proposals on the deportation front, or when it comes to the Fed's independence, in reality, and even on tariffs, actually, there are legal challenges. There's legal recourse that could be used, and some of those policies or approaches could eventually get reversed. So these are all important parameters that we need to make important assumptions at this stage. I mean, I can tell you our team has been working extremely hard on devising scenarios, on trying to, evaluate what the impact would be from the Trump 2.0 era, including, of course, on Canada. So I'm going to walk you through the way we think about this. The first thing is really the trade policy. This is the big one, the most concerning aspect. He's talking about 10 to 20% tariffs during the campaign. Now, yesterday we learned that he wanted to put 25% tariffs on exports from Canada and Mexico on day one. Of course, this is something that would be very damaging to the U.S. economy. It would drive up costs and inflation, and in turn, hurt our exports pretty deeply. We've assumed, our forecast right now assumes 10% tariffs. And I can tell you we're actually outliers among our competitors, because many of our competitors don't assume tariffs at all. They prefer to take the stance that this will not happen, this is posturing, and they kind of go with that assumption. We're not comfortable making that assumption, because during the first Trump administration, we saw that he did follow through with tariffs. They were later reversed, but we prefer to take that as a given. But we've assumed 10% in the exercise that we've done so far. And now the second thing is monetary policy. And monetary policy is important here because the Fed's job would be more complicated under Donald Trump. That's because he wants to have more of a say in Fed decisions on interest rates, and we know Trump has a very strong bias towards lower interest rates at any circumstance. So, the risk here for the Fed is that investors, financial markets, start to demand a higher risk premium on U.S. Treasury yields, and that ends up driving tighter financial conditions and therefore slower growth. So that's something to keep in mind, and also, of course, a lot of volatility in financial markets. Third thing is immigration policy. So that's a triple challenge. First, because you have lower pace of increase in the number of consumers, of workers, so that slows growth inherently. Secondly, because you would risk creating labor shortages. So a lot of that immigration has been people who have taken jobs that Americans don't want to do anymore. And we have the same thing, by the way, in Canada. So you're talking labor shortages, and then the third aspect is that those labor shortages would end up driving higher wages, higher costs for businesses that they could, in turn, pass through to consumers in the form of higher inflation. So that's another consideration as well. Now, it's not only negatives when it comes to Donald Trump. The two items on the bottom, deregulation and taxes, would tend to be positive for economic growth. When we talk about deregulation, his proposals have touched largely on the energy sector. So he wants to allow more drilling on, for example, on U.S. allow fracking on U.S. federal lands, things of that nature. So that would be in the direction of fostering more investment, perhaps more R&D developments, and then foster productivity down the line. So that would tend to be disinflationary down the line. And then on taxes, the first part is extending the tax cuts of 2018 to individuals, tax cuts that were enacted in 2018 to individuals. So that doesn't change anything. That's just existing policy that would be extended. But the big one is the corporate tax cuts that he wants to bring to 15% down from 21%. So now that would have the effect of potentially incentivizing businesses to invest more. Again, more investment, more R&D, especially in an age where you already have significant investment in AI, so that could spur things further. It could create broader spillovers to the global economy, and that could be positive, actually. The thing is, however, with taxes and with deregulations, is it depends on what's going to be the behavior from those. For example, when Trump reduced corporate tax cuts back in 2018, businesses back then were in a state of buying back their shares and paying out dividends. They weren't really investing or expanding, and so the impact was quite disappointing on economic growth. So we'd have to see whether this time is different on that front. When it comes to the impact of Trump, and this shows you at a very high level, the exercise we've done, you see the October forecast, so that was pre-election, and then the latest forecast that we have. 2025, what do you see for Canada and US? You see actually higher numbers. So we've increased our growth estimates for those 2 years. And it might seem counterintuitive, but we think of the tariff shock in two stages. There's a stage from the date of the election until the date the tariffs are applied. And we've assumed tariffs to be applied late in 2025, unlike the executive order he threatens to implement on day one. But we've assumed Q4 2025 for the implementation of tariffs. So what that means is that in the meantime, you're going to see a buildup in inventories on the part of U.S. importers, and that should benefit Canadian exporters. So it's, in other words, a bringing forward of exports that really boosts 2025. So we expect that to have a it's actually more than 0.3 percentage points, because those numbers incorporate also developments on the immigration front. I'm going to touch on these. But then what you see in 2026 is only 1.2%. And same thing in the US. We have a big drop off in 2026, and that reflects when the tariffs are actually applied. You have higher costs in the US, an erosion in purchasing power, and that slows growth. So you have the direct effect of tariffs that are playing on Canadian exports, they're reducing demand on Canadian exports. But also you have the impact of lower US growth as purchasing power is affected by higher inflation, and that amplifies the impact on foreign demand for Canadian exports. Now, 1.2%, and you could say that's not too bad, but remember that when we have an annual figure that's 1% or less, typically we're talking recession. Typically, when you have 2 consecutive quarters of contraction, you can still have a number around the 1%. So what we're saying is that the risk, and this is considering as well, a very important point to make, is 10% tariffs. So we've taken the least damaging of his proposal. Now, he proposed 25% tariffs. Of course, we would expect something weaker. So, of course, there's a lot of uncertainty around, like I said earlier, the what, the when, if it's going to be reversed. But it's just kind of a way to think about this. Of course, we're going to adjust those assumptions as we get more information. And if indeed he implements on January 20th 25% tariffs, we're going to be calling very potentially a recession for 2025 if that gets into effect as early as that. Now, touching also on Canada, that's the first major headwind that we have for 2025. The second major headwind touches on the immigration policy. So for 2024, the estimate is for population growth to expand by 3.3%. That is, by historical standards, is the fastest pace of population growth in nearly 7 decades. By the government's accounts, there were a series of announcements in 2025, either on international students or temporary residents as a whole, and more lately on permanent residents. Now, the government is saying that over the next 2 years, population should contract by 0.2%. And by the way, we haven't seen population contract in Canada in time immemorial. It's not something we usually see. And that's actually in terms of what we're assuming, we're a bit skeptical that this is going to happen. Canada doesn't have experience in implementing a population reduction plan, and the international experience with those kind of approaches proves that it's much more difficult to execute than what is stated originally. So we expect, as you can see on the right chart, the dark black line, that shows you what we're expecting, which is ultimately growth that is much slower than what we've seen, but not in contraction territory. But this still has the impact of reducing GDP growth in 2025, 2026 as well in particular. We do expect a little bit of an offset from stronger productivity. Businesses will find themselves with fewer employees that they can tap into internationally. Some of them will figure out ways to operate be as effective or even more with less employees. So we've incorporated a little bit of that as an offset, but this is still something that's going to affect the outlook. I'm saying that we're skeptical about the negative 0.2% estimate of population growth for the next couple of years that the government is putting forward. The Bank of Canada has actually a plus 1.7% forecast for those 2 years on average. So the Bank of Canada is even more skeptical than we are. Governor Macklem has already hinted that this forecast will be revised. So in other words, the Bank of Canada, in its next forecast, that's going to be in January, will have to adjust lower its estimate for population growth. So you see the net here that we have. 2025, you have a boost from Trump policies or the run-up or the change in behavior. I didn't talk so far about the Canadian dollar. We're going to see what our forecast is on that front, but the weaker Canadian dollar also participates in boosting exports in the lead up to imports. So that participates in the stronger economic outlook for 2025. I haven't touched on the GST, but just wait for it. And then 2026, that's when you have both the Trump effect and the immigration effect acting negatively, and of course, significant downside risks to that. I'm going to touch on housing. So, we've been accustomed to talk about the housing affordability challenge in terms of, difficulty accessing the property market, but more lately, housing affordability has been synonymous with issues on the rental front. And we've seen rent inflation rise north of 9%, reach a peak of north of 9% this year. It's come down a little bit more at 7.3% as of the last estimate. But here's the good news. What's in store for Canadian population growth, which we estimate will be on average at 1% over the next couple of years, that will, in our modeling, help rent inflation decelerate in most markets. So that's the intent of the policy. But in terms of what we've estimated to be the sensitivity of rent to population growth, we've found that this will help bring down inflation in that component. And incidentally, this is the very last area of stubborn inflation that the Bank of Canada has to deal with. We're at 2% inflation overall, despite rent inflation being at 7%. So this will further contribute to the Bank of Canada being in a more comfortable position when it comes to interest rates. Now, to interest rates and inflation. Now, on the property front, there's been a number of policy announcements. So the policy announcement we have, I think it was September, on the extension of the amortizations for buyers of first-time home buyers and buyers of a new home. We've estimated, given the constraints in supply, that this would boost prices by 7% down the road. So the affordability gain that you will get initially from having that longer amortization and therefore lower payments, that will be washed away by the fact that prices ultimately will be higher. So it's only a temporary effect on affordability. It's not a true affordability relief. Now, when it comes to Canada, one of the big, and that's where the part about the GST comes in. So, this measure to us is a quick fix, sugar rush type of measure. We've estimated, so, I said 2.2% next year for Canada GDP, add 0.2 percentage points to that. So it didn't have time to make it to the slides, but we've added a little bit because of that. So it will affect spending in the next couple of months, but then it will drop off. The effect will drop off. That's typically what we see. It's a very temporary impact, and us economists don't like temporary effects. And certainly, in this case, we don't like how broad-based the measure is. I mean, this is a government that introduced a child care benefit top-up, a grocery rebate that was directed to recipients of the GST tax credit. So much more narrow, much more focused on those more in need. Now they're rolling out checks that will hit 19 million people starting next spring. And the GST, well, it affects you and I, everybody. So, you got a bunch of, well-to-do people that will be dining at restaurants, $500 check and whatnot, and get a 5% rebate. That's great, but what's going to happen with the 5% rebate? It will be saved. It won't be spent. So it would have been smarter to focus on those more in need because they have actually higher propensity to spend, and the impact on growth would have been actually better, and the actual intent of the policy would have been more respected versus what we've seen. Now, this shows you this is a story about the fiscal anchors, because this announcement comes at a time when we already had questions on whether the doubts that, to be more precise, that the fiscal anchors would be respected. And Justin Trudeau has announced that Canada would strive to reach to come close to the 2% target for NATO spending on defense. You can see 2023, what the impact of that versus what we have prior to this announcement. But in 2023-24 and in the next fiscal year, we don't have the decline in deficit to GDP, which is one of the fiscal anchors. One of the fiscal anchors is that deficit to GDP continues to decrease and now stays stable. The other anchor is 2026-27, bringing the deficit to GDP under 1%, and that fails to be achieved. So in other words, just with that promise, they're already breaching those fiscal anchors. And those fiscal anchors, by the way, are important for ratings agencies because, we know Canada has a AAA rating with a stable outlook, but, we don't have budget balance as far as the eye can see, and there keeps being more promises and more spending to be added. There's a point where ratings agencies might look at it and say, well, Canada might not warrant a AAA. Now, we're always going to be more advantageous. Our situation will always look better than that of other countries, but still, there's something to be mindful here. You saw how the bond market responded last week upon the announcements on the GST, major increase in yields at the front end of the curve. So the markets did not like this announcement, and I think that gives a clear warning signal as to what we have, the wiggle room that we have really in Canada to implement, ill-advised fiscal policies at this juncture. I don't think, by the way, that this compromises the Bank of Canada. There's been a lot of questions about that, whether the Bank of Canada will have to slow cuts or whether that will create a lot of inflation. I don't think we're there. It's temporary enough, but it still comes at this $6.3 billion cost. So for not a lot of bang on for the buck on that dollar. So broadly speaking, on fiscal policy, lots of challenges right now because you think about, I've talked about Canada and you think about the US. Before the pandemic, they were at 70% debt to GDP. Now they're at 100% debt to GDP. The corporate tax cuts, they'll have a positive effect on growth, but that also depends on how bond markets react and how much investors demand to hold that debt. If we see interest rates shoot up, that will offset any positive impact. So that's something to consider about the fiscal space. More and more, there's a sense that things are getting stretched, things are getting strained, and there are different trade-offs when it comes to the intergenerational equity. So that's the whole principle of keeping the budgets balanced, having sound and sustainable public finances is to avoid the situation where you're just punting all your expense and debt on the future generation. The future generation, which is already contemplating much weaker prospects when it comes to housing affordability, when it comes to the opportunities they have versus generations the same age, some 20, 30 years ago. So those are important factors. And the risk here is that we are going to see some jurisdictions, maybe not at a federal level, but you could see some provinces start to squeeze things. I'm based in Quebec, and the Quebec government right now, $11 billion deficit, and they're going to table a plan to return to budget balance within 5 years. And the consensus expectation is that there's going to be deep cutbacks in spending, and that will hurt growth as well. So I'm putting that out there as a risk to growth, not just in 2025, but in further years, if governments need to consolidate further than what we currently expect. I mean, nobody has run with the promise of consolidating public finances, and this is an issue. We've had 3 downgrades this year. UK was downgraded, Italy was downgraded, France was downgraded, so we can't be complacent about that. I promised to talk about the currency. Sorry, that slide was supposed to be before, but it's fine. So what we've done in the wake of Trump is that we haven't made wholesale adjustments to our interest rate forecast. We've cut we've added one cut in Canada, so that cut is in 2026, assuming the tariffs come into play in end of 2025. And we've removed one cut by the Federal Reserve, assuming that you have more inflation. So the differential, the policy rate differential, which we had at 75 basis points by 2026, is now 125 basis points, and that participates in the currency actually ending weaker. So the forecast that we did just in the wake of Trump had the currency finishing at 141 at the end of 2025. It reached 141.7 overnight. I know that. This is going to be a very tough call. There's going to be a lot of volatility. I mean, it's appreciated ever since. So there's going to be a lot of volatility. But this, when we talk about the risks and the difficulty in forecasting in this environment, you have the tariff effects, but you have also the offset from the currency. The more the currency depreciates, the more it muffles the impacts of the tariff. So, as it stands, end of 2026, 142. Could it go to 145? It could easily. Could it go to 150? It could easily. The more the currency depreciates, however, the less it forces the Bank of Canada to respond to the tariffs per se, because the currency does the job of offsetting those tariffs. So this is the tension that we're going to continue to have in, specifying the forecast. For now, these are the assumptions that we made. A little bit less, a little bit lower rates down the line in Canada, because we think there's a big risk of a recession. Could go easily lower than that. Could get to 1.5%. It's not hard to imagine. It could be sooner than that as well. I've gotten questions as whether the Bank of Canada will cut 50 basis points in December. I don't think so. But for January, on January 29th at the next Bank of Canada meeting, if on January 20th, on Inauguration Day, Trump has implemented those tariffs, then yeah, it's a real possibility that we get a 50 basis point rate cut at that time. So things are in flux, but so far this is what we're sort of running with here. So yeah, I'm already a bit of off my time, but we're looking at 4 years of uncertainty. That's pretty clear. We're just back to policy by tweets or by truths. Or like, what an ironic name for a social media run by Trump. And I've been talking about just the basis of the announcement, what he announced yesterday. But that's an important shift from the first mandate. This is not about unfair trade. This is about illegal crossings and drug trafficking. So how exactly are we going to measure that? How exactly are we going to convince Trump? This is no longer about telling how our energy sectors are so intertwined, or how the manufacturing, the auto sector in the U.S. that relies so much on inputs from Canada and so on and so forth. This is about border policy and things that me as an economist, I don't have much experience really looking at. So it's going to be very, very wild. Like I said, we have to keep public finances unwashed, because this is an area that either financial markets force the adjustment, or jurisdictions think that it's time to be more prudent on that front, and that ends up hurting growth. There's a slower population. We don't believe fully in what the government is saying, but if they manage to execute, which is not something the current government has a reputation of executing things very well, but if they manage to surprise us on that front, then it could mean slower growth than otherwise. There's not just the negatives. I think on the productivity front, what we've seen in the U.S. has been very encouraging. That's why the U.S. has managed to avoid a recession. And like I said, those technologies, when it comes to AI, when it comes to automation, if anything, I would say for businesses, what's happening right now in tariffs, the response should precisely not to be about cutting investment. It should be about investing more. It should be about taking control of your competitiveness, and that's through investment, through R&D, through automation. Through that, you can offset any tariff, and you can actually gain market share going forward. So, I think AI, Canada has a lot of advantages on that front, but there's going to be a need for increased investment in computing capacity. That's where Canada lags a significant, on a per capita basis versus the US. That's where the major lag that Canada has relies. But when it comes to expertise, when it comes to talent, Canada has all that in the AI space. So, this is something that governments will need to, instead of focusing on GST and quick fixes like that, targeting investment, incentivizing investment in automation, provide tax credits for accelerated depreciation, things that we know has worked in the past. That's what a government, a government should be thinking about in Canada. So we'll leave it there at this time. Thank you very much for your time, and wishing you a great rest of the event.
Thank you so much for that, Jimmy. I'm not sure if I feel better or worse. Hi, everyone. I'm Dawn Kalea, editor of Report on Business magazine, and I'm happy to be here to moderate our next discussion. Now that we've sort of heard, I think our discussion will largely sort of mirror what Jimmy's been talking about here, but we're going to sort of go into how things are playing out on the ground and how business leaders are responding and adapting, or at least trying to. Let's introduce our panelists. First, we have Michael Waters, CEO of Minto Group. As CEO, Michael has spearheaded the transformation and growth of Minto from a wholly owned family venture into a fully integrated real estate investment management company. Welcome, Michael. Next up, we have Neil Cause, CEO of fleet management platform Geotab. Neil has a keen focus on AI, the Internet of Things, and connected vehicles. He's steered the company through exponential growth, and Geotab now has millions of subscriptions in more than 160 companies. Welcome, Neil. And finally, we have Justine Hendricks, President and CEO of Farm Credit Canada, which provides financing for farmers, agribusinesses, and food and beverage producers. Justine spent 17 years with Export Development Canada and another 7 with RBC. Come on up. I'll move over here. Hi, everybody. Thank you so much for being here. So, I don't know how all of you are managing, but I'm feeling completely overwhelmed by the sheer number of challenges we're facing at the moment. Take your pick. And as CEOs, I'm sure that that anxiety is magnified about 1 million-fold. So I'd like to start off by asking each of you what's keeping you up at night right now.
Well, I would say, for me, the entirety of Jimmy's presentation. It was an eye-opener for sure. But I would say in our business, we're housing providers, either new homes for purchase or rental housing, and real estate is a very long-term investment. It's the biggest investment most individuals will make. Certainly as a rental housing provider, significant capital outlay, long-term, and very sensitive to rates and outlook, and volatility in that outlook obviously is not helpful. So.
Right. Neil?
Right. So we're a $1 billion Canadian company, and we sell 80% of our goods in the US. So obviously, the issues we've talked about today are particularly worrying. We supply all of telematics for the US federal government, for instance. We don't expect telematics to go away, given that it helps with automation and building efficiency and measuring properly, which I think holds governments accountable. So we feel good about that. I think, if I'm totally honest, though, those issues are not the number one issues that I'm personally dealing with. I think day to day it is about competitiveness. It is about, in the technology space, we're on a little bit of a treadmill. You're always looking over your shoulder. There's always another company, really, from anywhere in the world that can compete with you in a global setting. And there's a massive, massive force that is coming at us really, really quickly, and that's AI. And of course, we hear a lot of the hype all the time. This is something that we've been doing for 20 years. My background is engineering. I was going to go and do AI at MIT, and ended up running the business. And so this is the real deal. For us, AI is the number one all-consuming thing. Obviously, it's not tomorrow, but if we don't start taking massive steps towards leveraging AI, bringing these services to our companies, the whole landscape of business, in my opinion, over the next couple of years is going to change. And if we don't get on that bandwagon now, we're not going to be there. So that's the number one thing that probably keeps me up at night.
Justine, how about you? What's got you lying awake?
So there's a few things, but maybe I'll start off by, at Farm Credit Canada, I've got the distinct pleasure of being responsible and enabling the ag and food industry. So what does the ag and food industry represent for Canada? It's about 150 billion in GDP, 1 in 9 Canadian jobs. And if you zero in on food and beverage, it is the sector that is the most important in terms of GDP contribution and jobs in this country. Yes, thank you very much. And we don't talk enough about this sector, and we all know in this country we're a net exporter of food. So with the lovely presentation from Monsieur Jean and my distinct colleagues on stage, at FCC, what we're focused on is we've got to be more resilient, because our job is to be there to support this industry and to make sure that it thrives. So how do we do that? And what do we think is important? And I think my colleagues commented on it. There's 3 areas we believe we really need to focus on. And I'd say it doesn't just apply to food and agriculture. It probably applies to all industries, particularly those that are exporting. So the number 1 area that we're focused on is around data, right? Zoning in on those data capabilities and taking those capabilities to be able to get the insights so we can make the decisions, because there's a lot coming at all of us, and the ability for us to pivot fast, whether it's something that happened last night, a big announcement or not, is critical to us being able to steer this ship. The second thing is, given the opportunities in front of us, and there's a lot to do, we've got to be able to partner, because alone we're probably not going to make it. So looking for opportunities, both financial and non-financial, so that we can zone in on competitiveness and be who we want to be on the world stage, is also critical. And the last one, which I think is a huge theme and started with Monsieur Jean, is about investing in innovation, right? There is a gap in Canada in terms of how much we're investing in innovation, and we need to close that gap so we can get these innovations to market, because I also believe that we have the talent in Canada, but we're not putting enough in order to be able to keep up and remain competitive in the market. So I've got more than one thing keeping him up night, Don, but hopefully that gives you a sense of how we're trying to tackle it at Farm Credit Canada.
Well, thanks for that. I mean, Donald Trump, I truly thought I'd never have to utter his name again. But here we are. So let's talk about the incoming Trump administration, which is something that is keeping me up for all sorts of reasons. And sort of maybe the obvious place to start, obviously, is with this announcement via Truth Social about 25% tariffs. You know, again, as Jimmy mentioned, you know, there's some dispute as to whether that's actually going to happen and when it will happen, but Trevor Tombe out in Alberta said this could cost Canada 2.6% of our real GDP annually and land the country in recession and next year. So, Michael, how are you feeling about Trump 2.0, as Jimmy calls it?
Well, certainly the impacts on economic growth, which drive household incomes, which drive the ability for people to purchase a home or rent a home, is probably first and foremost. Obviously, our supply chain in the building sector is heavily integrated with the United States and internationally. Many of the core building blocks, literally, of Canadian home construction are international commodities. You think of rebar, you think of cement and other things, but moreover, more complex HVAC systems, glazing and other things. It's a complex interplay internationally in terms of the development of those things. Housing construction costs have outstripped inflation by a factor of many times over the last many years. The impact of a trade war, heightened tariffs, and a constricted supply chain could potentially worsen that. And so that's certainly the second big factor that I would be very mindful of.
Yeah, Trump 2.0, I mean, I think for us, we're maybe a little bit different to most Canadian companies, given that perhaps a weak Canadian dollar is good for Geotab because our salaries are mostly in Canadian and we export to the US. You know, it's unfortunate for the rest of Canada, but I think that a Trump 2.0, you know, may be interesting in the sense that it's going to stimulate for a while at least the US economy. It's going to be a very, very interesting look at, for example, what is going to be the impact of slashing government? I mean, it's an experiment that only the Americans could do, only Trump could do. It's maybe something that we all want to know, how important is it to have large government? What is going to be, we all believe that government, maybe most of us in the room believe government should be smaller. And so being interested to see, how that long-term impacts. But I think, in terms of Canada and the economy, to me, I wouldn't be too panicked about, Trump 2.0. I do think that if you understand, how he works and how he thinks, not to discard anything that he's doing. Of course, we need to take it very seriously. But one has to understand how intrinsically intertwined the two economies are. And I mean, remember last time when the threat of aluminum, and metal and steel tariffs came up, that it just took, 2 weeks for it to be wound back, because there's a realization that, 17 of the US states, we're the biggest importer in Ontario of 17 of the US states. So I think ultimately we need to just stand up for ourselves and make sure that we have somebody strong at the helm, pushing back on the bully a little bit, measured, careful, thoughtful. And I just hope that we have a government that's going to do that, maybe quickly enough. And so that's really how I see it. I think ultimately, maybe it keeps me up at night, but it doesn't, I'm not laying awake all night, perhaps.
We're in safe hands with Elon Musk, looking at their efficiency down there. I'm sure it's going to go super great.
Just with that. Okay, so what I'd love to lean on is Trump 2.0. It's not 1.0. And I guess what I'm hanging on to or rationalizing and what we're trying to rally around is, think of it as if Canada and we're a captain of a ship, right? And the experience we have, because we've traveled all sorts of seas around the world, and when you're planning that trip, right, you're studying what climate is going to be like, you're studying the different currents, and regardless of all the work you do, you got to navigate and get to your end destination. And along the way, there's all sorts of things that might happen. But over the years, it's the experience you get, right, and understanding those different currents that gets you through, hopefully, each and every time. So for me, the 2.0 is important, right? We have lived through one of the administrations before. And the way we're tackling it is we're saying, okay, let's lean on the experience and the adaptability. And focusing on that is going to help us navigate. Does it give us certainty that everything is going to be okay? No. Having said that, as we've talked a bit earlier, there's areas where we can focus and standing up for ourselves, focusing on the long-term plan and really keeping our eye out on that, I fundamentally believe will allow us to navigate all the surprises that we've received so far that we may also continue to receive post-January.
Okay, well, you've made me feel a little bit better, all of you. Thank you.
That was my mission.
So you're all in industries, housing, AI and data, agriculture, that are enduring, labor shortages these days. And now we've got the federal Liberals drastically cutting immigration targets in the next year and beyond. So what are your chief concerns? I mean, Michael, this sort of hits you in both the demand side and in labor.
Yeah, I mean, we have seen, I would say, housing affordability, which, as Jimmy pointed out, reached its sort of nadir, I guess, in the summer, whether it was rental rates or home affordability was at its very worst, and it started to improve as rate cuts started to come down. We think about population as the prime driver of demand for housing, and certainly moderating population growth would tend to moderate demand for housing. That may not be necessarily a bad thing. We had a tremendous supply-demand imbalance before the immigration policy changed in 2016 and population growth started to really ramp up. So we have a large and enduring problem in that housing deliveries have been vastly outstripped by population growth over the last 10 and even 20 years. Our housing stock is aged, particularly in the rental housing side. So we have a big problem that we need to address. Certainly when I think about on the supply side, one of the biggest challenges facing our industry is the aging workforce in the skilled building trades. And that, it has not been the destination of choice for young people leaving high school, for many years. And that's problem is, probably the heightened focal point of our demographic time bomb, in that those skilled trades, plumbers, electricians, HVAC technicians, they are aging out rapidly, and we're just not replacing them. So the goal to bring new Canadians in, whether permanent or temporary foreign workers, the challenge in our sector is that you need to be certified. Particularly anyone touching a gas pipeline, electricity, anything like that, you need a Red Seal certification. And those certifications take time. And so there's no quick fix, unfortunately, for us.
Right.
We need to work on funding education for trades in this country. It remains woefully underfunded. And it certainly would be a good conduit to bring more young people into the business, which I think would be tremendously rewarding and remunerative careers. It's just hasn't been as sexy as,
Right.
say, AI.
Yeah. As I was saying to Michael earlier, my 13-year-old daughter has announced that she wants to go into the trades in some capacity. So it's going to take a while, though. She's only 13, sadly. But we'll get her there. We'll get her there. Neil, how about you? How's this looking from Geotab's perspective?
Yeah, so I think before COVID, I would have said that one of the best places in the world to open up a tech business is Canada. So I think we're on the doorstep of a massive economy, the United States. We have access to relatively cheap, qualified talent. We've got an open immigration policy that brings in PhDs and data scientists and smart people. And for the longest time, I think Geotab has significantly benefited from that. So we have offices all over the world, in Europe, in Asia, in LATAM, in the US, and in Canada. And so we do hire engineers globally. And I think one of the problems, from my selfish perspective with COVID, was that it woke the world up a little bit, especially the Americans, that you can hire Canadians and you can let them stay in Canada and they can work for an American company, which is not so good for us. But I do think that still, I'm of the opinion that we are a fantastic place to have, tech companies. We do not have necessarily the management depth when it comes to technology. So we have new recruits that are coming in, that come through the universities that are smart. They don't have the experience. And so combining some of the American experience with some of the Canadian talent has worked brilliantly for us. And so I think that's still a massive opportunity and will continue to be. And I don't see, from a tech point of view, we did have a little bit of a bump after COVID where you couldn't find anybody in tech, and I think it's normalized a little bit, and a lot of kids are going into the tech space. So I'm pretty optimistic, but it's kind of a little bit unique compared to perhaps construction.
Right. Justine?
Yeah, so I'll pick up maybe on a couple of things. So on the tech side, if you look into the ag and food industry, and it's back to investing in innovation, I get, the chance to visit all sorts of farm and manufacturing facilities. You can see what an investment in technology is doing in the ability to take some of the more labor-oriented work, to leverage technology to do that so that you can focus on the value-added activities, right? I'd say probably similar to your industry where there's a requirement for that certification. The more we can navigate and have technology support us, then you start to see some really interesting things happening in ag and food. I love when I go into some of these farms and you go in and you've got an idea in your head and it's loaded with TV screens and AI technology and drones and so forth. It is helping making this industry a lot more productive. And one of the outcomes of that is your dependency on labor that's at a lower cost starts to reduce, right? Another challenge that you have in ag and food is there is a huge transition that is taking place in Canada. And actually, it's not just a Canadian trend. In terms of our farming communities that are going to retire between now and 2030, it's something like 35%. And we don't have the next generation necessarily ready to take over. Why? Some is perception of the industry. We don't talk about ag and food and the great opportunities that it offers. It's expensive, so the price of land values have gone up so much that it is very difficult, whether you're a new immigrant, whether you're a young farmer or wanting to go into manufacturing to enter. So those are some of the challenges that we have to deal with. But the opportunity is to be able to take a different look to ag and food. You know, we need folks that have AI skills. We need labor that have certifications. We need lawyers. We need bankers. Maybe not all the bankers, but I can say that because I was a banker. And, you know, we need people that have great minds and data scientists so that we can crack that. But those would be some of the things that some of the labor shortages, you know, with a backdrop to what's happening in the sector are things that we're going to have to navigate and we're trying to focus on.
I mean, how do you solve for that? Like, you know, AI is all fine and good, but in ag, I mean, you need hands-on people who are going to do the work. And, you know, similarly with construction, I mean, how do we change perceptions? How do we change the way education is sort of delivered in this country to produce the workers that we actually need?
So that's a great question, Dawn, and I'm hoping you're going to help me with that. So, you know, actually, to the very basics, we have a job to do, and we're taking our part at FCC. Funny enough, like I've just spent the last couple of weeks going to different campuses and actually speaking to engineering schools, business schools, and to demystify what the ag and food industry is. What's fascinating to watch is when we actually talk about the opportunity, and in ag and food, from a Canadian perspective, we believe that Canada is facing something that we're calling a generational opportunity. It's something that Canada has never had in this industry before. So what do I mean? Canada, with its ag and food industry, can probably tackle and help solve 4 major problems around the world: health, hunger, climate change, and be a huge driver of economic growth. But in order to do that, we need different skills, right? So that's one of the ways that we're starting to tackle it. From a Farm Credit Canada perspective is what are the financing solutions we can offer to make it easier for people to enter the sector. And the other area that we have to focus on is that demystification. And I have to tell you, Dawn, I've visited enough greenhouses that could be the size of 3-4 football fields. Guess how many employees are in those greenhouses that have automation? Just guess.
Could
Now
not
I'm
begin.
doing the interview. I love this.
Oh, the pressure.
Pick a number. Pick a number.
50.
Less than 14.
Wow.
That's what innovation can do.
Right.
And maybe one more point on that. So one of the companies that we acquired, a very good friend of mine has gone off and started a company where he actually builds robotics and using machine learning to visually recognize, that's apple farming, so that what these robots can do, and it's so impressive to see, is actually help with the harvesting. And so there is innovation coming. That's the amazing thing about technology, how deflationary it is, how much you know, we don't expect. It's these innovations that we're not planning for. We don't think, okay, we need people. Well, suddenly we don't need as many people, which is great.
Right. So can I just, one quick story, because I think it's a really good one. One of the favorite stories I tell when I go to universities and talk to staff, early in my mandate, I was able to go to this greenhouse in Alberta, dead of winter, and the goal of the entrepreneur is, he says, I really think that in Canada, we should be able to have strawberries, Canadian-grown strawberries all year round, because we all know how strawberries during the winter don't taste as good, right? So get in there, full of robots and the whole thing. And he points to me, says, Justine, look down the aisle, and I see this robot, right? And he says, I said, oh, that's kind of neat. And he says, so this robot is picking strawberries, and strawberries are a pretty delicate fruit. But he says it does more than that, Justine. Think of it as this robot is giving each and every one of those strawberries an EKG. I said, come on, you're kidding me? And he says, no. And we have a partnership with the University of British Columbia, right? All the data is going to British Columbia. And we're partnering with them so that as they're studying the data through different weather patterns, how things are evolving in the greenhouse, we're better to improve how we go about harvesting so we can get better and better and more predictable with this crop. So when I showed up, it was a couple of days after a snowstorm, and he said, Justine, the funniest thing happened yesterday. He says, UBC called and said, what's going on? And they said, well, what are you talking about? Your strawberries went into shock. Can you imagine a strawberry going into shock? I don't know about you guys, but I was shocked hearing that strawberries can go into shock. But that's what innovation,
Wild.
AI, technology robots can do. So then, as the farmer or the entrepreneur, you can focus on understanding that data, back to pivoting, adjusting, and getting in better and better. So Neil's totally right, and we're good at this technology in Canada. We need to invest more in it.
My only experience with farming was working on a dairy farm once for 5 days, and it's still very hands-on. Regardless of those
no, Dawn,
vacuum
I'll
sucker
prove you-
things.
Oh, yeah.
Woo!
There's technology there too.
Manure on, I think, is probably more accurate. So talking about innovation, I'd like to continue on that. You know, Canada often gets a bad rap in terms of productivity and innovation, to put it mildly. You know, very risk averse, lack of sort of domestic funding. How can we up our game, and what do you see as being needed immediately?
I mean, maybe I'll jump in. I think that, you know, the building sector, like almost every sector in the country, is going through a pretty rapid phase of innovation. A lot of it's being driven by regulation, and in particular in Canada, the building code is getting tighter and tighter. And a lot of it is focused on, you know, Canada's goals for decarbonization, energy efficiency, and being less energy intensive. And so we're seeing that in not just building envelope technologies, you think of windows and other things, but also building mechanical systems, so heating and cooling, those kinds of things. And so these increasingly sophisticated building systems, I mean, it's just a marked difference if you look at a building 40 or 50 years ago. It has a demand for much more sophisticated constructors, people, consultants, trades, actually designing and building these systems, implementing them. It's demanding a lot more. And so that training, and not just the early certification training, but the ongoing training that we're offering to our workers in the sector is, I think, really important in terms of driving innovation and, I would say, productivity as well.
Right. Neil?
Yeah, so I think a lot of the lack of productivity in Canada maybe boils down to lack of investment in innovation and technology in businesses. And this is maybe a little bit controversial, but I think some of it hinges around our, you know, lack of taking risk. I think that in business and in life, you have to take calculated risk. And I think you need to go, I've got a great business, it's doing well, I need to double down. I need to grow this business. I need to invest in it. I believe in it. And of course, it's a little bit risky because maybe the ROI doesn't pay off and another competitor comes up, but we've got to have more faith and more belief in doing that. So I think that's a really important piece. And I think the other kind of key element is this transformation around AI. Look, AI was practically invented in U of T computer science department. Jeffrey Hinton, when the world had abandoned AI, he was there and he was building it up. And some of the, you know, the best minds in the world in AI, the guys that, you know, run Tesla's, you know, AI department and, you know, OpenAI and the rest, all came from his department. And I think that, you know, we have so many AI startups in this ecosystem in Montreal and in Toronto, and Canada really is well set up to be a leader and to take advantage of AI. And so I think, you know, that's really where we got to look to. We can take a little bit of a cheat. We can cut the corner, if you like, and go, we don't have to fight our way across the road. So.
Right. Justine?
Yeah, so the ag and food industry, no different in terms of the gap in investing in innovation and technology. Maybe two things I'll add to the conversation, and it's through some of the observations I've had as I cross Canada. We've got great talent, but I think one of the areas where we need to improve, and it applies in this industry, is we don't do a good job across Canada of actually sharing what each other is doing, right? So sometimes I walk away with this perception that, you know, what UBC is doing and researching, you know, the University of Dalhousie might be doing the same thing. So the ecosystem and investing in the ecosystem, make sure that our ecosystem comes together to collaborate, to then, may I say, you know, Team Canada puts its best foot forward. I would suggest we need to get better at that because that can really help. And there's all sorts of reasons why it doesn't. And then in terms of what do you do about it, so from a Farm Credit Canada perspective, as we recognize, like if you look at ag tech and you look at proportionately, let's say to the US or other nations, we are vastly under investing in technology and even more severely in ag tech, right? So one of the areas where we're going to lean into is we've just relaunched a private equity shop at FCC this past April, and that is exactly to be able to bridge that gap. It certainly won't solve everything, but between that and seeing how we can actually proactively play a role in connecting the ecosystem, those are the areas that we're going to lean into. And I think, being that we're in Toronto and so forth, I think in Canada, and this is a general comment, corporate Canada doesn't tend to buy Canadian technology. Like it's not the number one go-to, right? So that's an area I think where we can all help, and it's back to that ecosystem, right? We may not be aware of all those technologies that are available, so the more we can do with that, then as a country, right, we're really going to be helping, and we can thrive a lot more than we are today. But the talent, as Neil says, is definitely here.
Right. That's encouraging. I'd like to talk a little bit about sort of sustainability and climate risk, which I think hits all of you in different ways. So I'm not sure who wants to jump in first, but Michael, you're dealing with, as you mentioned, housing responsible for, or buildings responsible for 40% of emissions. So it's a big thing to tackle.
Yeah, I mean, we're probably two major areas. One is in the construction operation of new buildings. We know that real estate broadly is about 40% of the source of greenhouse gas emissions in Canada, and residential obviously is a significant component of that. The federal government, provincial, municipal governments across the country have set pretty rigorous goals in terms of bringing not just new housing, but existing housing to net zero standards. And so the challenges in bringing a 1970s era apartment building into a net zero world are daunting. You can imagine a building built to the building code of 1970 and trying to make it net zero carbon is incredibly difficult. It means investments in the building envelope. It means investments in mechanical systems, including technology like AI, to control the building automation systems, the heating and cooling, to make them more efficient. It means fuel switching from gas-powered or fired boilers to electricity, air source heat pumps and things of that nature. Significant investments for sure. The other area where the real estate sector is massively impacted is obviously in the risk of severe climate events. You think of the very severe flooding that Calgary faced 5 or 6 years ago. And how do we make our communities and our buildings more resilient to extreme weather events? And that is a big challenge as well. We've seen it in soaring insurance rates. That's providing a strong impetus for owners of properties, whether you own your own home or a rental housing provider, to make those kinds of investments to make them more resilient. So those are probably some of the biggest challenges in the real estate sector.
Just a few.
Right, so I think if construction is the number one emitter of carbon, and it's mostly cement production, the number two largest emitter would then be transportation. And so we at GeoTab found ourselves in a position where we had almost an obligation to do our part to help companies decarbonize, given the footprint, given the place that we're at, being able to be interfacing directly with these largest fleets in the world. And so we spent a lot of time, working on that element. We ran the largest electric fleets in the world. I think, so for example, I think New York City is about 16,000 electric vehicles out of a total of 39,000 public vehicles in New York City, like all the fire trucks and the ambulances and all the vehicles involved in public service. And that would be the largest fleets in the world. But it is disappointing. Like if I look at the total number of electric vehicles out of the 4.6 million total, we're probably at about 160,000, 180,000. And there's a bunch of reasons behind that. So number one is, getting the power to the locations to be able to charge these vehicles. the availability of commercial vehicles in order to meet the needs, garbage trucks and buses and the specialty vehicles that we have, the high costs, battery costs are coming down. But I am optimistic. I'm optimistic for a couple of reasons. One, if you just look at the trends with lithium production and you look at the cost of batteries, it is inevitable that in the next couple of years, it is going to be cheaper to own an electric vehicle, not just lifetime cost, which we're already there. I'm talking about purchase cost. And so there's some hidden benefits to electric vehicles that are not being totally understood by fleets yet. For example, maintenance costs are significantly low. You have such a simple system. You have a battery and a computer and a motor, right? You don't have all these mechanicals and fluids and wear and tear. And so I think that there's an inevitability. I mean, in Texas, for example, they are the biggest producer of green energy now, across the United States. And it's not because the Texans are green. It's just because it's cost effective, right? It is the most efficient, effective way to bring energy. And so solar and wind in Texas is huge. So I'm optimistic, and I think that we need to make these changes. We're taking a step back. So I want to paint the optimism, but you've heard the rhetoric. We've got some other challenges that we're dealing with. Europe is at the forefront, but they're in trouble, right? The economy is stalling. These initiatives that they're pushing forward on electric vehicles, they're going to have to take a step back. The Americans are slowing down. Now it's back to hybrid. So I think we're going to get a pause, but I'm very optimistic for the kind of medium term.
Right. Justine?
Okay, so agree with what's been said so far. So if I come in with the ag and food lens, right? Something I want this audience to be aware of is think about it as close as you go to the farmer has one chance per year to make it happen, right? So if you look at between now and 2030 and now 2050, just think about how many growing seasons. So the ability to get it right the first time is super important. Another considerations is if you look at rural Canada, in many areas in rural Canada, internet accessibility is a challenge. So how do you want to be able to get that data? There are some electric tractors that are starting to come in the market, but they're simply not powerful enough to be able to sustain what's needed in Canada. So, and the agriculture industry in Canada has also an opportunity to be able to help solve some of the climate challenges we have through biodiversity. So I do think that the ag and food industry is in an interesting position to actually be a good contributor to what might be some of the solutions to be able to get there. But I do maybe want to end on a positive note because, there's a lot of really great things that Canada has done. And recently, the Global Institute for Food Security out of Saskatchewan used a scientific approach to be able to compare, the bushel of wheat that's grown out of Saskatchewan compared to that bushel of wheat that's grown somewhere else in the world. So you would have to put that bushel of wheat from Saskatchewan on a ship, and you'd have to go around the world 3.5 times in order to emit the same CO2 as the same bushel of wheat that's grown in other jurisdictions around the world. So I'm like Neil, I'm an optimist, if you haven't noticed. There are some really good things that are happening, but we need to do a better job to be able to articulate that. And we also need to be able to recognize, because a lot of those practices, I would say, in particular in ag and food, have happened few decades ago, and now, right, we're called to do that much more of a stretch. So how you reconcile that to be able to make sure that those incentives support the vast investments that are required in terms of dollars to be able to develop these technologies, that's going to be critical. But the story is not all glimmer for Canada Ag and Food.
Well, I'm going to, of course, be the Debbie Downer with my next question. And maybe, Neil, you want to take this since you are essentially a data and AI company. I mean, we talk a lot about AI is going to save us in many respects. It's also a huge energy suck. And, we're talking about reviving privately owned nuclear, era, specifically to sort of power AI. So what are your thoughts on that in terms of sustainability?
So obviously, so maybe for those that don't understand, so the GPUs, which are the kind of computers that run the AI in these big data centers, use an enormous amount of power. It's not just power, actually, it's water as well, because cooling is a very important part And so all of the cloud providers like Google and AWS and Microsoft have revised their goals in terms of being able to be climate neutral. And they're trying to do alternative things. Like you may have heard that 3 Mile Island is going to be restarted. I think it's maybe AWS or Microsoft that actually got the US government to agree to that so that they can try and meet their goals without exceeding it. And so, again, I think pragmatism is really important here. We are going to take a couple of steps back, maybe to take a whole lot of steps forward. And we have to be prepared to do this. It's also in our case, like if I think about the food and ag business and I think about the construction business, maybe it's a lot harder for those folks to become, carbon neutral. Maybe it's easier for people that are running big fleets to become neutral given where the technology is going. And I think we just got to be pragmatic. We've got to look at how does the world sit out and where can we go that makes the most sense. Let's invest heavily there. I mean, I'll give you one kind of crazy irony. Like, I've had a Tesla for a long time, and I remember talking to actually Matt, the same guy that's now started this robotics company doing food and ag. And I was talking to him about electric vehicles, and he was saying to me, Neil, because lithium was very rare and expensive at the time, he said the right thing for humanity to do is to take all that lithium, put it in commercial vehicles that operate almost all the time so we can maximize the use. Instead of Neil, who gets in his car and drives to work and it sits there 15 minutes and then it sits there for the rest of the time. So I think it's this kind of pragmatism that we've got to follow now. Like, we know we have these goals, but it's not at any cost. So we've got to just be smart about it. Let's put our dollar where it needs to be spent so that we can get the best ROI. So that would be the best advice we can do.
So we've got just under 2 minutes here, so I'd like to leave on a positive note. Since we started with what's keeping you up at night, what has you most optimistic right now? 30 seconds or less.
I'll keep it short. You wouldn't be in the real estate business if you weren't an optimist. It's been very choppy last several years. Certainly with the surge in population growth, driving demand and volatile rates, first very, very low and then quite high and now coming back down again. We're certainly some tough spots. You look behind me in the vista, there's not nearly as many cranes on the horizon as you would have seen, say, 2 years ago if you looked behind me. So there's some tough spots, but I do look at the Canadian housing market broadly. We are seeing rents moderating. We're seeing resale volumes starting to pick up. Rates are starting to come down. So I am fundamentally very optimistic that we'll start to see things moderate and start to improve in the housing market in 25. So,
Okay, I'm going to go back to where I started. I think that AI, if we look back in 5 years' time, that humanity is going to be in a remarkable place. We're going to be the richest that we've ever been. We're going to solve and tackle many of the world's hardest problems. Maybe we can have that mystical four-day work week that everybody would like to have. And I think maybe we can think about things like universal income and whatever may come next. I just think AI is absolutely transformational, and I'm super excited for us and everybody in the room in Canada about what that's going to mean.
Justine, last very quick word to you.
Yeah, so what I walk away with is Canada's demonstrated its ability to be resilient, right? There are definitely some stormy waters out there, some coming back for the second time, but those are not necessarily within our control. So the most important part is zone in on your adaptability. We have the ability to be resilient, and there's a big opportunity for Canada out there. It's a generational one, as I said, like it's never been in this country before. So let's go and grab it, and we can.
Awesome. That's a great spot to leave it. Please join me in thanking Michael, Neil, and Justine for being here today. That was fantastic. And now I'd like to hand things over to my colleague, Matt Lundy, the Globe's economics editor, for the next and final discussion.
Thank you, Don, and hello, everyone. I'm Matt Lundy, the economics editor at the Globe and Mail, and I'm pleased to be hosting the closing discussion. We have an important and perhaps turbulent year ahead of us, as we were reminded of last night. I'm I had a list of things I was going to describe about the year ahead, but I think we're all pretty well versed on them at this point. But one thing that we haven't really chatted about a ton is Canada is struggling with productivity. It's something that you can go into the Globe's archives and read about in the 1980s, so it's been happening for quite a while. Our final speaker, he's very well positioned to speak about this, and he will tell us about how to position the Canadian economy and businesses for success over the long term. Dan Bresnitz is a professor and Munk Chair of Innovation Studies at the Munk School of Global Affairs and Public Policy with the University of Toronto. He's an award-winning author on public policy and an expert on industry innovation. He also recently wrote a series for the Globe called Prosperity's Path, which I encourage everyone to read. Thanks for joining us, Dan. So there was something that you recently wrote in a Globe story where you said, strategy is a plan to achieve at least one long-term goal under conditions of uncertainty. We are in a very uncertain period right now. What is a business to do under these uncertain situations? You know, particularly if you do business with the US, we may have a new government in Canada coming in as well. What does strategy look like in 2025?
So first of all, you have double uncertainty. Once because you have that lovely guy coming back to power south of the border, but you have a government that talks about massive productivity, stagnation, zero innovation, claimed for the last 2 years that we have no money and cut down all programs for long term, and then just gave us a gift using our own money. So we are in a very uncertain world, and if I'm a businessman or business person, I would say that I cannot count on my own government for the foreseeable future, period. And I cannot count on the US actually playing by the rules. So I will try to hedge. And right now, hedging does not necessarily look good for Canada. Meaning, we just heard, and that's one thing we really have, is unbelievably talented people that we can employ here to do very high-end R&D, for example, and paying them 30 to 40% less. So I'll keep them here. But anything that I actually need to move or to show that I'm made in America, I'll move south of the border. That's what I will do as quickly as I can.
It might help to sort of diagnose the sort of bigger structural issues around productivity in Canada. It's been stagnant or even declining for a while now. How did we end up here? Why is it such a grave situation?
So first of all, I know that for this crowd, most people don't need it, but let's just remind ourselves why productivity is important. Productivity is important because we just heard that life is unaffordable for many, many Canadians, and for our own children, it will continue to be unaffordable if you look at the future. The only way to make it affordable is to actually increase productivity, because that's the only way that businesses, as anyone who works in business, know you can actually pay higher wages. Okay? That's the most simple thing. We have very puzzling, stagnant, or even sometimes declining productivity, as you said, at least over 30 years, probably more. It is puzzling because we have the most highly educated labor force in the world. And we actually become more and more educated. So what our humans can do is as good, probably better than any other workforce in the world. And yet, we're stuck in a stagnant. So there's two reasons for that. One, we already heard in multiple panels today, our businesses don't bother to invest in new technology, new equipment. It's lovely to hear about this robot that will pick strawberries. I'm just wondering, again, I'm a university professor, whether all that wonderful R&D and invention will turn up to innovation owned by people from Abu Dhabi, China, Korea, or the US, or whether this will be scaled up as a Canadian company. Second, I'm wondering, once this is actually proven to work, who will be its first large-scale customers? And we already heard that it's not going to be Canadian. So if we want Canadian businesses to actually increase productivity, they need to start engaging with knowledge much more. It's not they're stupid. You look at the profits of Canadian businesses, they've been going up. So something is wrong in our environment, in the way we structure the economy, and the way we structure competitiveness, and the way we look at the world, and that's actually the role of policy to change that. It's not going to be loved by business, but it's the role of government to actually change it, to create different incentives for business.
What can they do to get businesses investing more?
In equipment and in technologies. First of all, if I'm a business person, my real aim is to have the highest profit possible for the lowest amount of risk. I mean, that's what I should do. I'm sorry. Right now in Canada, I can do that without investing in technology. That is because we have not a highly competitive market, and that's an understatement. We are not getting the right incentives to do that. And on the other hand, ask any ICT entrepreneurs what is one of the biggest things that they have to buy, and the biggest thing that they have to buy is data and telecommunication. And ask them what are the prices for that in Toronto and the prices for that in New York or Miami. And you'll start to see why some businesses actually invest just as much as they can. So we need to have a much more competitive market. We need to actually orient Canadian companies to export, not to buy American businesses, to export from Canada. And we need to make sure that the factors that would make investment in new technologies affordable and actually make sense and lower the risk. So from the price of telecommunication to taxes to grants are changed. Because right now, I have nothing bad to say about the business CEOs of Canada. They're giving us extremely high profits, lots of jobs, not very high wages, but lots of jobs. They're not doing anything wrong. It's the system that sends them that way and that path and that incentives. And until we change that, I do not expect any CEO to change anything.
Did you have a role within, or like a guest role within the federal government at one point? Remind me.
I was the first and last Clifford Clark economist for finance in the last 12 years.
Why the last?
Do you think that this current government engage a lot with people from the outside, either from academia and business, and ask for advice?
Perhaps less so than usual. Well, what sort of advice did you give them, and how receptive were they? Although I feel like I may know the answer already.
So we gave him a lot of advice about how to stimulate more innovation. Again, not invention. We're very good in invention, as we heard, but actual innovation, putting ideas into work in our economy in all stages of production. We gave him a lot of advice on, and that's a long-term game. So the question is how you build the structure to make that happen. We gave him a lot of advice about, remember, global supply networks? It was very hot during COVID. It's hot again. A lot of advice to how to think about it instead of, I think we need 2 battery plants. Why battery plants? So we gave him a method. I'm not going to say what they did with it. We also actually told them how to support more green tech, how to support innovation in traditional industries. But all of those are investment in creating organizations that actually have operational capacity and takes time. And that is not what this government has been doing for the last 4 years.
I just wanted to touch, like, on the productivity side. A lot of people look at, like, GDP per capita as this metric to watch. Certainly gets quoted in the media a lot over the past couple of years. There's a big gap between us and the US. But on other metrics, Canada certainly looks better, like life expectancy. We have higher employment rates. Is GDP per capita a flawed metric for looking at these things, or what's a better way, I guess, of looking at the productivity aspect?
So we have a problem with productivity. And we have been very polite about that because we have such a good life here in Canada, okay? The problem with productivity is not that we don't have a good life, and we still have a really good life here, is that slowly but surely we're in decline. So the last panel and the panel before that showed us how our children will not be able to afford a house in the time let's say we could afford a house. If we bought in the last 10 years, I'm not sure about affordability. Terms of complexity of the industries that we have here in Canada, we just heard that even in construction, we are one of the only countries that build those beautiful high-rises, but actually doesn't produce some of the critical steels components that you need in order to buy them. So it's not as if nobody in the world or just 3 places in the world produce it. We are one of the only ones that don't produce it. You look at our resources industry, from forestry to oil to mining, and you actually look at what we do here versus what we did 40 years ago, and we are less sophisticated, especially relative to others. And that's a real problem. The real problem is that over time, it would lead us, and especially our children, to not have as good life as we have now. And the question is, when are we going to realize it and change it? In terms of why I'm hopeful, and why, I mean, if I wasn't hopeful, I would have stopped talking about it, maybe moved back to US, is because of other things he said. We have amazing life here. We have high life expectancy. We bitched about our healthcare, which is indeed worse than what it was 10 years ago, but it's still one of the best, and we can fix it. We're the most highly educated. Our universities are amazing. Our K-12, if you take away 3 small island states and Korea and Japan that has 0 immigration, is probably the best in the world. So we have everything we need and a vision of how we want the society to look like. Otherwise, we wouldn't have invested so much in health for everybody, in great education for everybody. But then we don't go and do the last step, which is to create the economy that actually use those skills.
Let's say hypothetically we had a strong period for productivity growth, that we got out of this rut. For the average Canadian, what would they notice? How would their lives improve?
So the younger Canadian will have a lot more job opportunities in Canada, in really good, challenging jobs. The wages would significantly increase relative to what they want to buy. Assuming the government in both a provincial and federal level then use it smartly, you don't have to wait years or months to get surgery. Your life will significantly improve, but also if you look, and I think that's the most important change that I have seen in Canada since COVID, you would look, and as a young person, you will say, I have a future which is so much better than what I have now because we're growing. And as a parent, you'll say, my children have a great future here. I don't need to plan how they go to an American university at some place so they have a chance to have a good job in America, make enough money, and move back, hopefully, to Canada to live next to me. There will be hope. and hope in the future. And I think that's a critical ingredient we have been missing for the last 3 or 4 years.
There was something else that I wanted to read from one of your Globe stories. There seems to be a bit of a theme in them about the government not totally delivering for Canadians. But you said, we are adding people to the ranks of the federal service at an unprecedented pace. At the same time, the capacity of our public service to get things done and done well seems to be rapidly deteriorating. Why is that?
I don't remember who, or maybe it was the whole panel before. It constantly harped on innovation and new equipment and new technologies. We, me included, constantly, excuse my language, beach and wine about the business sector. The government not only is not leading and showing the business sector how to behave, it's much, much, much worse. So we have the CRA that is adding more people, but zero new technologies to deal with problems. So its productivity, how much it can do per person, is flat. I had that story about our new industrial export of stolen cars. Mm-hmm. This, just how you check things in the port can be so significantly be more productive if you use new technology. And the government just doesn't do it. Instead, it adds more people instead of changing the ways it doing things. So when it adds more people, the people that are there are much more productive, and the people that they add are even more productive. You just add more people who do almost the same thing at the same time, so the marginal impact that they have stays the same, which is very low. They should go with, I don't remember who it was here, and visit some of Canadian entrepreneurs. And by the way, one thing that the government can do is start buying Canadian new technologies. There's multiple things they can do, but they don't.
Okay. As far as like you teach at a university, we've mentioned Canada is highly educated. How effectively are we leveraging that talent, and where can there be improvements?
So, I'm sorry. I think I'm the last one. I was supposed to be optimistic.
Well,
so,
we'll end on an optimistic note.
Okay.
Yeah.
We are doing extremely good job in educating our people. I can tell you, because I also taught in very highly regarded American institute, that the people that enter at both the undergrad and the master level in Canada are significantly better prepared, and they get better education. The problem is that in both the public sector and the private sector, they are offered jobs, and maybe because they're so skilled, they're offered jobs which actually do not fully utilize their potential. And one way to think about it, again, I'm a business leader, or I'm the minister of whatever, or the DM of whatever, and I don't like risk, because risk ends me in a scandal in the Globe and Mail. I will not deal with any high-risk, uncertain technology, but I'll say, hey, she's very, very educated. With my very old equipment and software, she can still do that job. Mm-hmm. And that's basically what happened. So the people who are really ambitious look south of the border. We have a chance, if you want to be optimistic. A lot of our students no longer would look south on the border in that happiness when Trump is the president. But we have to offer them something to do here that really challenge them. And as of now, we don't.
Okay, so we have a couple of minutes left, and I did promise to end on a more upbeat note. Are there things that you're seeing in the Canadian economy right now, beyond education, what you said, where we are seeing sort of innovation, or maybe some examples of things that we can look to for inspiration?
Sure. So I see a lot of Canadians trying to innovate, a lot of Canadians with good ideas, a lot of Canadians that actually care about their country, and care about the country in a way that is not just, I want to be rich. But I want to be rich, and I do want to be rich, and I hope they want to be rich because that's a great incentive. But I want to be rich in a way that also helps the society. So this is a Sudbury socks. And if anyone actually want to be more hopeful, I highly recommend that you go to Northern Ontario, especially around mining. I would say especially around Sudbury, and just see the amazing things that are happening in industries we don't like to talk about, but actually people care about green tech. We need to mine about an order of magnitude more minerals and metals. They call them critical, which is a misdemeanor when you add one more every week. And we need a huge amount of innovation there. And it will help Canada, and it will actually save the globe, to be honest. Not your paper, but it will. And those things are happening. And they're happening in industries and in niches in the mining industry probably no one really cares about in Toronto, but are probably much more important than one more social media company. Yeah. The question here is how do we then scale this up and use the fact that we already have this amazing ecosystem in mining, in other resource-based industries, to become the global leader in those industries and start selling those solutions, know-how, equipment all around the world, and not just get stuck in Northern Ontario and maybe a little bit to Quebec.
Well, we are going to have to leave it there for today, but please join me in thanking Dan for joining us today. That concludes our program. I would like to thank our speakers for taking the time to share their views today, and a big thank you to all of you in the live and virtual audiences for tuning in. On behalf of the Globe and Mail, I'd also like to thank Desjardins again for making the event possible. Thank you, and have a nice day.